All right, so buckle up, everyone, because today we are diving deep into the world of crypto arbitrage.
Oh,
Yeah, get ready. It's going to be a wild ride.
I'm excited.
Me too. And we'll be pulling some fascinating insights from Metinja Pushtaruda. So essentially, we're talking about folks who are kind of like, they're trying to outsmart algorithms and other traders to,
Right.
to grab profits from these tiny little price differences that pop up across all the different cryptocurrency
Yeah.
exchanges. Kind of crazy, right?
Yeah, crypto arbitrage is definitely not for the faint of heart.
No.
It's a game of speed, precision, and a deep understanding of how these markets move.
So let's break it down a bit.
Okay.
What exactly are we talking about when we say crypto arbitrage?
Well, at its core, crypto arbitrage is all about capitalizing on these price discrepancies between exchanges.
Okay.
So think of it like this.
Yeah.
You see Bitcoin trading at, let's say, $53,000 on Binance.
Right.
But over on Coinbase, it's going for $53,400. That's a $400 difference, right?
Yeah, that's a decent chunk of change.
It is, and that's the arbitrager's opportunity.
So they buy low on Binance and sell high on Coinbase.
Exactly.
Simple in theory.
I was going to say.
Much harder in practice.
Right, because with, what, over 300 exchanges out there?
Yeah.
It feels like it'd be...
That's the thing.
Yeah.
The sheer volume of exchanges is part of what makes crypto arbitrage so complex.
Right. I mean, are people really, like, manually tracking all these different prices all the time?
Well, some might, but most serious arbitrageurs rely on algorithms and automated trading bots.
Makes sense, because it seems like you'd have to be incredibly fast to catch these opportunities
Exactly.
before they disappear.
Speed is absolutely crucial in crypto arbitrage.
Yeah.
Those price discrepancies we talked about, they don't stick around for long.
So it's not just about finding them, it's about being the first one to actually make the trade.
Exactly. The more traders that spot the difference and jump in, the smaller the profit margin becomes.
Oh, I see. It's like a race to the finish line.
Yeah.
And everyone's trying to grab the gold before it vanishes.
So the longer the price difference exists, the more people pile in.
Right.
And eventually the price levels out between the two exchanges.
Right. It's called price convergence.
Oh.
And it's the arbitrager's biggest enemy.
Okay, so you're basically racing against time, you're racing against other traders, you're racing against these algorithms.
It's a wild west out there.
Is there any way for a regular person to even compete in that kind of environment?
It's tough, no doubt about it.
Yeah.
You're essentially going up against these high-frequency trading bots
Yeah.
that can execute trades in milliseconds.
Wow.
But there are things individual traders can do.
Okay.
For example, you can set up price alerts across multiple exchanges.
Right.
So imagine you have a bot that's constantly comparing, let's say, the price of Bitcoin.
Right.
And the moment a profitable discrepancy pops up,
Yeah.
you get an alert.
Yeah.
And you can jump on the opportunity.
So you may not be able to beat the algorithms in terms of pure speed,
Right.
but you can at least be ready to act as soon as that window opens.
Exactly. Preparation is key.
Yeah, that makes sense.
It's about being opportunistic.
Absolutely. So we've talked about the how,
Right.
but I want to touch on the ethical side of things a bit.
Okay.
Because it feels like, I don't know, kind of almost like taking advantage of these tiny little inefficiencies in the market.
Yeah.
Is that a fair characterization?
Well, it's a complex issue,
Yeah.
and there's no easy answer.
Right.
Metinja Pushtaruda doesn't really delve into the ethical debate,
Okay.
but it's definitely something worth thinking about as you explore this world of crypto arbitrage.
Absolutely. Because, we have to consider, like, is it really fair to profit from these, I don't know,
Yeah.
like, almost like glitches in the system?
Yeah, glitches or just natural fluctuations.
Right.
You could argue that arbitrageurs are actually helping to stabilize the market.
Oh, how so?
Well, by exploiting these price differences, they're bringing prices closer together
Right,
and making
yeah.
the market more efficient.
Okay, so it's not necessarily a cut and dry,
Yeah.
good versus bad kind of situation.
Exactly.
It's more nuanced than that.
It's a gray area for sure.
And the more I learn about crypto, the more I realize that, like,
Yeah.
nuance is kind of built into the whole thing.
It's a complex ecosystem
It really is.
with a lot of moving parts.
Well, this has been super fascinating.
Yeah.
Looks like we've only just scratched the surface of crypto arbitrage today.
Oh, absolutely.
But hopefully we've given our listeners, a good starting point to kind of dive in and explore further on their own.
Definitely.
Because it's a high-stakes game.
Yeah.
It requires speed, knowledge, and a healthy dose of competitive spirit.
You got to be on your toes.
Right. But for those who are up for the challenge,
Yeah.
crypto arbitrage can be,
It can be lucrative,
yeah.
but it's not without its risks.
Right, absolutely.
So proceed with caution.
words to live by in the crypto world, I think.
Yeah, for sure.
So I'm curious for our listeners out there,
Yeah.
what are your thoughts on this whole idea of crypto arbitrage?
Right.
Do you think it's a legitimate training strategy?
Yeah.
Or is it, like, morally questionable?
Interesting. I'd love to hear what people think.
Yeah, hit us up on social media. Let us know your take. Because it's a conversation that's worth having.
Absolutely.
For sure.
It is.
All right. Till next time.
See ya.
Happy trading, everyone.
Take care.